Hey future millionaires, this is Phil from the Next Chapter team, and welcome to another ETF review. Today's ETF review will focus on Invesco funds. We're going to review 4 Invesco funds in detail. At the end of the review, we will take a look at what your balance would be if you invested in all 4 of these funds consistently over a 5 and 10 year span. But before we jump into the review, please take a moment to like, subscribe, and share some friends. Help us out, grow the channel. So sit back, relax, and enjoy an ETF review today. All right, jumping into the Invesco review. Like all of our ETF reviews, we start out with a recap of what an ETF fund is and how to buy them. But before we jump into that, let's go a quick recap on the ETFs we're going to review today. We're going to do an Invesco Bloomberg Pricing Power ETF, the Bloomberg Analyst Rating Improvers ETF, and then the Dorset Wright Small Cap ETF, and then finally an Aerospace and Defense ETF. Now this one's going to be, that last one is going to be where we add a little extra roundabout on this portfolio, because we always try to do a large cap, small cap, a mid cap, and then something extra, whether it be an international or a straight up sector play. And that's going to be our sector, aerospace, today. So as a reminder, if you haven't watched our videos before, what is an ETF? An ETF is basically a basket or a group of investment securities. That could be stocks or bonds, or even other funds sometimes. And ETFs also change in price throughout the day because they're traded just like a stock, unlike mutual funds, which have end of day pricing. So again, when you think ETF, think about the price fluctuates throughout the day because it's traded just like a stock. Further, ETFs traditionally, so on average, tend to have lower expense ratios and fewer brokerage commissions. That's due in part to how they're set up. And then in addition to that, many ETFs, not all, many ETFs are some direct level of an index. So it is actually becomes more efficient because it's part of an index. As the index moves, the ETF moves as well. Okay, so now we move into how do you buy an ETF? Determining how to buy ETF really comes down to a 4-step process. First, determine what type of account you're going to buy ETF in. It's usually either an IRA or a general brokerage account. That's like a taxable brokerage account. And why only those 2 spots? Because typically, unfortunately, you will not have an ETF option in your 401k. But if you do, awesome. Next, you determine which investment broker you're going to work with. So you could go with one of the bigger players. That could be Fidelity, TIAA, Kraft, Charles Schwab, and many more, right? Then from there, you decide on how frequently you are going to invest in these funds. We tell a lot of people, if you can, bring yourself to the budgeting point where you could do it the same line of how you get paid. And so weekly or bi-weekly, if that's when you get paid, try to invest consistently. That way you're just enjoying the averages of the price. But at most, bring it down to monthly. But that 4th step is probably the most important out of all of this. Make it automatic. You don't want to make this manual. You want to be automatic transfer into your investment account, then an automatic purchase of the investments that you are trying to purchase in this investment account. For each ETF, we're going to do a quick look at the ETF category, benchmark, fund summary, expense ratio, top holdings, and then the most fun of it all, the fund performance. Starting off is our Invesco Bloomberg Pricing Power ETF. This one is a large cap blend. This one is working to have at least 80% of its assets track against the Bloomberg Pricing Index. So the Bloomberg Power Pricing Index is what this one is tracking against. And the expense ratio for this one is 0.4. So for every $10,000 you have invested, you would pay about $40 of expenses per year. This one has 50 different securities within its portfolio, the fund. Big companies include Kroger, General Electric, Lowe's, Tractor Supply, CRH, and Best Buy. But then look at that sector breakdown. Overall, at the very top, we've got industrials at 30%, information technology at 17%, consumer staples at 15%, healthcare at 15%. Look at that. That's a nice mix. Everything under that is under 10%, but still, you have a great mix of industries and funds and companies. Now let's jump into the performance. Overall, the 1 year, 18.3. 3 year, 10.28, 5 year, 10.93, 10 year, 10.3. And if you've been in this fund since it started in the very beginning, you would have had annualized average returns of 8.8. And that's pretty good. You know why? Because it beats inflation. Beating inflation is really what you're trying to go for overall at all of your funds. The more it exceeds it, the more ahead of the game you are in the long run. Moving into our second fund, this was the Bloomberg Analyst Rating Improvers ETF. This is a mid-cap blend, and this fund is seeking to track 80% of its total assets compared against, again, the Bloomberg Analyst Rating Improvers Index. So it's a specialized index from Bloomberg. What do you have for expense ratios? 0.40. So for every $10,000, you'd pay $40 a year. Now, what investments do you get with this? Again, you've got 50 different stocks in this one. You get NRG Energy, Oracle, 3M, McCormick, Watsco, International Paper, and Rollins. Big push. Okay, a little different from the last one. What industries? Look at that breakdown. Consumer staples is number 1. Number 2 this time is industrials. Utilities is 12.54. That's number 3. And then from there, you got other big plays in sector, information technology, materials, communication services, and consumer discretionaries. Finally, rounding this out is healthcare and energy. So nice mix of sectors in this fund. Now let's move into our third fund. We've got a DWAS. That's the Dorsey Wright Small Cap Momentum ETF. Again, that goes by DWAS. This is a small cap growth. This one is working to index off of the Dorsey Wright Small Cap Technical Leaders Index. And expense ratio, 0.60, which means for every $10,000 you have invested, you'd pay $60 in expenses every year. With this fund, you would be investing in 199 stocks at the same time, securities. So companies like Modin Manufacturing, American Coastal Insurance, Alpha Multi-Algorithmic Resources, Transcat, Moonlake, and SPX Technology. What industries do you have? Well, look at that. You have sectors, that is. Sectors you have is industrials at 20.5, healthcare at 20, financials at 15, consumer discretionaries at 13, and then technology, information technology at 10.99. After that, everything's under 10%, but still you would have gotten materials, consumer staples, energy, real estate, utilities, and communication services. Not bad. Great mix for a large fund. 199 stocks, giving you a lot of divestiture, a lot of space, a lot of sectors. All right, let's talk about performance. Performance for the 1 year, 25.2. 3 year, 3.15. 5 year, 13.3. 9.2 is what you would have received after 10 years. And if you've been stuck with this one since the very beginning, since fund inception, 12.15. This is really interesting. This is one of those times where we picked a small cap that clearly was kicking butt some years. Look at that. 1 year, 25.22. And that 5 year, again, 13.13. That's amazing. All right, on this fund, we have a aerospace and defense ETF. This one is a ETF category of industrial funds seeking to work 90% of its total assets against the S&P Composite 1500 Aerospace Defense Index. And this index and ETF drove the expense ratio to be at 0.50. So that means for every $10,000, the annual expense would be $50. Let's jump into what's in there. Look at that. Okay, so you only have 52 different companies, and all of them are aerospace or some form of tech. You've got companies like Lockheed Martin, RTX, Boeing, General Electric, Northrop Grumman, General Dynamics, Honeywell, L3, Harris Technology, Transdem, and Eaton Technologies. And check that out. The industrial sector breakdown is heavily weighted, just like it says it would. It's going to be industrials, 93.5. Then from there, it's just information technology at 5 and change. And then materials and consumer service, communication services. Look at that. That's a very interesting and nice, clean and easy to read play here. I love it. Now let's take a look at the performance. Look at that. That 1 year, 26.86. 3 year, 12.62. 5 year, 12.83. And 10 year, 13.23. And then since inception is 12.9. This is a nice example of a sector that has held steady. And, if you follow the news, these companies have their troubles, right? Especially in the airline industry or the manufacturing around it. They have their troubles, but when they do well, they're really profitable. And you see the returns, frankly. And right here, look at that. Like 5-year. One sector, only 52 equities, and they probably changed a few throughout the years. But I would venture to say that it's very likely most of those 50 have been consistent throughout the years, and that's what's giving me that strong basis. But if you look deeper, you can see there were some years it was negative. Look at that, 2018, negative 0.73. But a lot of times when it's up strong. And of course, 2020 for this industry was just hammered. 2020, they only had 0.37 returns. That's just, ugh. But look at the 2023, 18.93. So really, this is a pretty amazing view of how a sector, when it's doing well, or it has that good, strong basis, when it performs nicely. Now, before we wrap up, one more time, we're going to look at all 4 funds. We're going to take a look at what account would look like if you invested consistently in these 4 funds. Okay, now let's jump into it. Let's take a look at a person that's going to contribute $7,000 annually into their IRA, whether it be traditional or Roth. And again, we have 4 funds here. First off, our Invesco, this is our large cap, the first one. This one had a 1-year return of 18.3, 5-year of 10.93, a 10-year of 10.3. Next, we had a mid-cap blend, the Analyst Rating Improvers Fund. This one had a 1-year of 21%, a 5-year of 9.31, a 10-year of 7.57. Then the Dorset Wright Small Caps, this is your Small Cap Momentum Fund, 1 year of 25.2, 5-year of 13.13, 10-year of 9.2, and then finally our industrial play, this is that Aerospace and Defense ETF. This one had a 1 year of 26.86, and then a 5-year of 12.83, and then a 10-year of 13.23. That is pretty amazing. Now, it's going to be cool to see exactly how much would be in this fund if you consistently invested in this over a 5 and 10-year span. Okay, now let's take a look at what this account would be in 5 years. 5 years, you would have contributed $35,000, making up about 71% of the account, and then the rest would be growth, and that would be $200,000. So again, your overall account would be $49,000, $35,000 is principal, and the rest of it's growth. But I'm going to bet it's going to do really nice if we jump up to that 10-year. It's that long-term investment that really pays off. Check that out. Your balance would have been $124,000. Now let's break it down. One time, we've got 56% in your principal, so $70K, $7,000 a year, and it's the current max of an IRA. So $7,000 a year, 56% would have been the principal. The rest would have been all growth. 44% or $54,000 in growth. That's almost a complete 50-50 split. Not bad. That's pretty darn impressive returns. So again, investing over the long term, over consistently, really does pay off. Hope you enjoyed this review. Please drop a like and share, and we'll get to you on the next one. Hey, thanks for staying to the end. This video is brought to you by the Next Chapter team. If you enjoyed the video, please take a moment to hit that like button, drop a comment, subscribe, share with your friends and family. This will help the channel reach out to more individuals just like you. We offer one-on-one coaching where we work with people and small businesses to determine a clear path to achieving their financial goals. This includes things like budgeting to reduce debts, planning for big purchases, and even learning how to build wealth with the tools that you have readily available to you. So please see our link below to schedule a free 30-minute call with our team to talk through coaching and understanding your current financial situation. Also, check out some of our affiliate links below for high yield savings account. This is a great place to put your money when you're saving up for those big purchases and your emergency fund. Check out some of our videos right here, and please enjoy and see you in the next video.